Welcome, and thank you for joining us. You're listening to the Beyond 50 radio program. I'm your host, Daniel Davis. Joining us here on the Beyond 50 radio program today is a wonderful guest that we've had on our program before. He is a financial wizard, if you will, for lack of a better word, with more than 600,000 subscribers who subscribe to his monthly newsletter simply titled The Rough Times. Today we're going to be talking about Obamanomics. That is right. His new book is Obamanomics and How We Can Prosper During the Obama Times. And I'd like to welcome to our program today our guest, Howard Ruff. And Howard, thank you for joining us back on the program.
Thank you very much.
Obamanomics, just what is that exactly?
Well, it's actually synonymous with socialism, but socialism is not just a name-calling thing. Socialism is when the government owns or controls the means of production. Now they've taken over the banks, Wall Street, car companies, and they were attempting to take over 1/6 of the American economy, which is healthcare, and that's not just creeping socialism, as we've been worried about for 100 years. That's galloping socialism.
Now, with Obamanomics, it's obvious that the prices of things are going up due to inflation. Let's talk about that and what people can do. Howard, are you still with us?
Yeah, I'm with you. I didn't hear you, though.
Oh, I'm sorry. Okay, a little missed over there. What I was talking about is with the government beginning to own so much of the economy, will this result in inflation, and what can we do about it?
Well, sure. Socialism always causes inflation, and this time, inflation is always caused by increasing the amount of currency in circulation. The world's littered with dead paper currencies. The average currency lasts 75 to 80 years before it eventually collapses under inflation. But government keep buying people's votes by issuing more currency and paying them things. So when you have in socialism, in the early stages, it sounds very attractive to people because they're going to get a check from some level of government when they do this. This one is out of control. I never thought in my lifetime we'd be talking about government in terms of currency, in terms of trillions of dollars, but we are this time.
Mm-hmm. Now, what is that exact? Is this something, because he was just doing a State of the Union speech where he was trying to outline last night, for instance, the idea that within the next couple of decades we should be able to get all this under control, but do we really see that happening? Is that even going to be possible?
That's empty rhetoric.
Mm-hmm.
Empty rhetoric. And I was really kind of disgusted by his speech last night.
Mm-hmm. And tell us what some of those things were that you could let our listeners know. Some of those out there who may not be as financially literate, why what he said was about as empty as it gets.
Well, what he did is basically said, I'm not going to change. I'm going to keep doing what I'm doing. I don't give up. And so even the setbacks he's had electorally, like in Massachusetts, he's ignoring those things. And he's hoping that time will fade people's memories and will now be able to continue doing what they've been doing. And what they've been doing is devastating for the economy, as reflected in gold and silver prices, which are good indicators because they've been going up continually for some time.
Mm-hmm. It sounds to me then that with gold and silver, this would be probably good insurance for investors.
This would be what?
Good insurance for investors.
Well, that's one of the basic things I recommend, gold and silver and their derivatives, which are the mining stocks and so forth. And I've, in my newsletter, The Rough Times, I've been publishing since the first of the year an investment menu, an a la carte menu that you can select from of about 80 stocks, 80 investments, including gold and silver. And they, over the last year, if you bought them all, which you couldn't do, but if you select them, you get something like 87% return on your money. So that's pretty extraordinary, and that's all a reflection of the things we're worried about. It's like Yogi Berra said, it's deja vu all over again. We've been through this kind of thing before in the 1970s when I first came on the American scene, and so the investments that I recommended, which are all investing in inflation, like Will Rogers said, investing in inflation is the only thing that's going up. All of these things have been running away lately, and we've had returns of anywhere from, like if you pick the wrong ones and out of my investment menu and they didn't do very well, you still got 50% of your money. The more conservative investments, the gold and mining mutual funds and gold and silver itself have only been up 30-40% for the year, which is still a pretty good return.
So when it comes to investing, then this day and age, it seems that investing in companies such as buying stocks and the like, it might just be kind of a hard bet.
Investing in what? Excuse me, I'm having trouble.
In companies.
Well, some companies do very well.
Mm-hmm.
There's never such a thing as a total destroyed market where there's nothing that works. In fact, my whole career has been built on the fact that there are opportunities everywhere, no matter what environment you're in. And right now, the inflation-oriented stocks are leading the pack by a big way. For example, let's take oil drilling companies, the companies that make and manufacture the drilling rigs. I think they're going to do very well. I also like uranium mining stocks. We've got 35 uranium plants, or power plants, under construction or on the drawing board. And great Scott, these there's only half enough uranium above ground to meet their needs. So the uranium mining companies I like very much. It depends. Depends on what there are going to be some companies that will do very well despite the problem. But the ones that make money, big money, are the mavericks, the ones who choose to invest in the things that Wall Street doesn't particularly like. Mm-hmm. For example, you have one of the recommendations of the conservative financial advisor is to buy bonds. No, that's a bad bet, because when you have inflation, which we're going to have, the interest rates go up. When interest rates go up, bond prices go down. So a lot of the very conservative investments are toxic, really. They're bad things to do.
Now, when you talk about companies who actually build, for instance, the oil drilling rigs or uranium mining, now it would seem.
Louder, please.
Yes, I was saying that with the environmental movement, that generally investing in companies such as ones that make oil manufacturing rigs and the like, it would seem like that would be kind of risky, wouldn't it?
Well, it's risk and everything, but what you want to do is keep the odds on your side, and they'll do very well. For example, inflation is going to drive up the price of gas, of oil and gasoline, and so the companies that produce it, the oil companies, are going to be hard to choose from because a lot of them have their oil fields in areas that are subject to expropriation. So I think they're risky. But the oil drilling rigs are American companies for the most part, and it's like the gold rush in California in 1847. A lot of gold mining companies and gold miners went broke, but the companies that made the picks and shovels prospered and did very well.
Now, what would you consider to be the best strategy for investing over the next 5 years?
Invest in inflation.
There you go.
Especially now, when you can do it before inflation has really taken off. That's one of the very best strategies. Another good strategy to bet on inflation for your family. And remember, my constituency is not Wall Street; it's Main Street. And the constituency consists of American families, middle-class families. But one of the things you can do if you know inflation is coming is when you go to the store to buy anything, any kind of store, you don't buy one of something, like one can of tuna. You buy a case, and you store it away. And I'm talking about everything from diapers to soap to food. That's one of the things. So that you now are buying at today's prices and will be consuming at tomorrow's higher prices. That's one of the things I recommend to my subscribers. Commodity storage program.
Now, do you see, or is it possible that inflation will go down at any time? I mean, will it turn around, or is things just going to continue going up and up and up?
Well, you believe in miracles?
Well, you got to believe in something.
I know you have to believe in something, but it would be better to believe in something that's likely or true. And the problem is that we've got this administration in the saddle in the White House for the next 4 years, and they've got Senate. I think this inflation is not going to turn around unless you have the equivalent of Volcker and Reagan, who ended it in 1981 simply by stopping printing money and stopping giving money away. Now, do you really bet that this administration is going to hear the drumbeat and be willing to stop doing all the things that they've already committed to do?
Now, again, I talked about the Obama speech last night. It seemed every time he was finished with a paragraph, there was a standing ovation. One of the big things that he was laying out was health care coverage, and I could just think to myself, well, this all sounds good, and they're all applauding, but those people that are sitting in the Senate don't have to worry about that as much as Main Street people do.
No, they don't, because they have their own wonderful health care program that's a lot cheaper and a lot more comprehensive. So why should they care what we do? We really have we're really being governed by an elite that gets elite programs, and specifically are exempted from having the problems that we're going to have with the programs that the government comes up with.
So what can a person do when it comes to health care to be sure that they can feel safe?
What can a person do when it comes to health care?
Right.
Well, I suggest that you start saving. You get out of debt and start accumulating funds, and so you're not sending your money off to lenders for interest, but you can start accumulating it, and you can start saving your money, and you can start investing in inflation. Then you can afford to pay for your own health care.
Yeah, that would certainly make sense for a lot of people here, that's for sure. Now, you, in your newsletter, that comes out every month, as I understand?
Yeah, it comes out every 3 weeks, and plus a weekly update every week. And the update might be 2 paragraphs, it might be 2 pages. Depends on what's attracted my attention in the meantime. But the regular newsletter, which is 8 pages long, comes out every 3 weeks.
Because it's really interesting in your book, How to Prosper in the Age of Obamanomics, that you talk about roughnomics, which is your type of economics. Tell us about what that is.
Well, roughnomics is not a school of economics like Austrian economics or Keynesianism. They tell government what to do. Government wouldn't do what I suggest anyway. They wouldn't listen to me. But it's a list of things you can and should do to protect your family in these very difficult times. And sometimes it goes against the grain. It's the people who make the money or prosper who follow roughnomics are going to be mavericks, and a maverick is a bovine that's left the herd, and he's doing very well. And he's going to be lonely for a while because he's out there by himself, like you would be if you followed the roughnomics. But the rest of the herd is going to be turned to hamburgers, so it will pay off.
I know what's really interesting about your book, especially when you put it in the same category, if you will, of other books out there about investing in money matters, is you really spend time talking about the importance of family. It's as though investing in family becomes your number one strong point.
Well, the importance of family, I automatically think of that because we're a middle-class family. We have a big family. We have a lot of children. And I basically write about the same things I'm advising them to do. And so uniting families, which is really the most powerful unit of American life, is the right thing to do. Because if, like, for example, I have a couple of sons who are really pretty wealthy. They did very well. If we're bound together, they might be able to help others that aren't quite so prosperous. In fact, if I died tomorrow, they'd be able to take care of their mother. And so binding together a family is one of the most critical areas of advice that I give people. So we have a close family, and we all live together in northern Utah here, most of us anyway. The rest of them are spiritually on board. And so the uniting of the family is a very, very important issue. In other words, you can't think of investing as like Wall Street as something you do that's independent of your family life. I don't think that makes sense. I think that all ought to be integrated.
Mm-hmm. Now, as you talk about getting out of debt as well, which is the big thing a lot of people tend to do, it's interesting how you seem to hear a lot of commercials out there. If you're, $10,000 or more in debt, we've got this program for you. But it's really quite simple how, for one, a person can try to at least avoid debt the way the average American has gotten into it, but at the same time, the necessary steps to take to get out. Could you share those examples with our listeners, please?
Well, let's use me as an example. For example, we have two nice Toyotas in our garage. They're 3 and 4 years old. They're just as comfortable and get you from here to there sitting down in air-conditioned comfort as a brand new one, but they only cost about a third as much. And so we have a lovely car. I love my Toyota Avalon and my Highlander, but they cost me about a third as much as a new car. I remember we recently attended a posthumous testimonial dinner for a man who died recently who was given the Father of the Year award. But he's a car dealer, major car dealer, has a lot of dealerships in the western states. And it occurred to me suddenly that he's put more people into debt than anybody in Utah, which happens. And when we had the Cash for Clunkers deal recently, people would go in expecting to trade the clunker for an old car that gets good mileage, and they ended up buying new cars and accumulating. So they would take a paid-for car and trade it off for a new car, and so they have more debt. Mm-hmm. Well, sure, they've got a fancier way to get from here to there sitting down in air-conditioned comfort, but they could do the same thing with a clunker.
I know it's interesting, too, as you talk in your book about how we tend to look at our neighbors and other people, and we tend to sometimes have spending habits that equal how we feel that we're just not as equal to those people.
And that's the most stupid attitude I think you can have in life. Sure, maybe your neighbor has a Mercedes in front of his house, and maybe he has a boat in the driveway. But that doesn't tell you how much money he has or how prosperous he is. That just tells you how much debt he's in. And so I think that's to be avoided. And so the attitude of going in debt, which incidentally is fostered by government, because people borrowing money and spending it is a major, they say, positive economic factor. Well, my job is not to help save the country. My job is to help save individuals who strengthen the country by being in good shape financially. And so that's what I've done. I could afford to go out and buy new cars if I wanted to, but I'm happy with my 4-year-old Avalon. I think that's the most wonderful car I've ever owned.
Mm-hmm. I know I was said that even Warren Buffett, considered to be the richest man in the world, never spent more than $3,000 on a car.
Incidentally, you're fading again.
Fading again. It seems maybe the Obamanomics is getting in here and cutting off our system here. You were talking in your book, and it was interesting that you had learned some lessons from Art Linkletter. And that was pretty interesting what you discovered there, and it kind of folds into how people can find security, because that seems to be important for a lot of people, but by trying to get back to the entrepreneurial American spirit.
I think that's true, and I think Art Linkletter taught me the very important lesson that he's learned when he would invest in a company. He's a very successful venture capitalist, and when he'd invest in a company, if it failed, they'd spend a month rubbing their noses in the mess and finding out what they did wrong. If it succeeded, you can't even tell them what those companies are. They just would toast each other and sleep up their hangovers and go home with their checks after they sold out. But he learned more from any one failure than he did from all of the successes put together. And that's one of the most important lessons I learned from Art Linkletter. And Art Linkletter is a good friend. We became good friends. And he's still around. He's like 98 years old. Mm-hmm. But he's still around and still giving talks. Mm-hmm. But the important thing is that if someone comes to me and wants me to invest in their company, if they haven't failed at least once, I'm not interested because I don't.
Now, entrepreneurism is one of those areas that probably the common person out there today who's working at a job just to pay their bills or pay off their debt would be kind of one of those last things they would think about. But when you see, large companies closing their doors, and for instance, you take a look at General Motors declaring bankruptcy and people losing their jobs there, entrepreneurism would be an area you might find the most security if you're just willing to roll up your sleeves and do what needs to be done.
Well, I've always felt that having my destiny in my own hands and controlling my future, is which the entrepreneur is doing, is really the safest way to go, because we're learning that trying to be safe by investing in a big company may be the dumbest thing you can do. It may be a very silly mistake you make. And so one thing that's good about this failing economy is a lot of people are left without jobs, can't find jobs, and so they try creating a company, creating an idea if they had an idea. So maybe it's negative problems like this that are the place of birth of some very good companies. I've talked to a lot of entrepreneurs, and we used to have an entrepreneur boot camp, and where successful entrepreneurs would come in and we teach them some ways to do things better. And I would ask the group, I remember one time I asked the group, how many of you in this room thought you were going to fail, and about sure you were going to fail, and the wolf was at the door and nipping at your heels, and everybody said, give up, you're going to fail. But you kept on, and you created a successful company. Every hand in the room went up. Every entrepreneur goes through something like this. So the entrepreneur attitude that says, okay, maybe I need to change course, maybe I need to do things differently, maybe I need to hire a partner who knows what I don't know, join with them. But that's the entrepreneur spirit. And so those are the people who are going to succeed. And sometimes the birth of these companies that become big companies are in troubles just like today.
Mm-hmm. Now, and it's interesting, you have a chapter in your book, How to Lose Money in a Hurry, the financial poison to avoid. Could you go ahead and talk with our listeners about some of those things that can become pitfalls that could really cause you problems while you're trying to stay ahead of inflation and stay out of debt?
I was talking about investments that will lose you money?
Right.
Well, the thing that that's the whole idea of being a maverick. You have to not follow Wall Street, and I won't follow what a conservative investor tells me to do, because he's rewarded with commissions for selling certain things that I don't like. For example, I used the example of bonds before. Do you want to buy bonds when the dollar's losing value? Do you want to buy anything that's denominated in dollars, with the exception of gold and silver, which eventually will stand alone? If you want to do that, that's the dumb thing to do, and you will lose money. For example, I have a lot of people, also subscribers, who don't quite get it, who say, well, what if I buy gold and silver and it goes up? When do I sell it? Well, great Scott, you want to turn it into dollars when the dollar is fading? Just hang on to it. Mm-hmm. And what's happening with Obamanomics, with Obama in the White House and the socialists in control of both houses of the Senate, is that they're going to destroy the dollar. And so anything denominated in dollars, like the Dow Jones Industrial Average, mutual funds, those things are going to do badly, because this is not a transitory thing. It's going to end with some kind of prosperity on the other end of it. I believe we're going to continue until we've destroyed the dollar. And in my investment menu, where I recommend a lot of mining stocks, sooner or later you're going to want to sell those while there's still a functioning buy and sell market, and convert into bullion and coins and keep them, because that's where we're going to end up eventually.
It just seems interesting that Congress back in the day would enact a law where the Federal Reserve has become the people who get to print the dollar and make the rules. It seems that that's kind of going to be self-destructive almost by what you're telling us.
Sure, it's self-destructive. That's the basis of the self-destructive we're in. And that's absolutely, what you just said is really a verity. and that's the wisest thing you've told me.
Mm-hmm. So what then happens with the Federal Reserve if the dollar is going to be destroyed?
What happens to the Federal Reserve? Darn if I know. That's above my pay grade. I don't really know. And in fact, elephino. That's a cross between an elephant and a rhino.
Right.
Elephino. And that's not my job. That's not my perspective. I just want to help individual families get through this. I don't care whether you're an entrepreneur, you still have a family, and you still have personal financial needs, and so that's my constituency, and that's all I care about.
Mm-hmm. Well, certainly as you read this book, How to Prosper in the Age of Obamanomics, it's all about people also taking personal responsibility for their direction and for what they're going to do and to become educated. And you certainly talk, at length in your book what to invest in and what to kind of watch out for and maybe not get so involved in there. Howard, could you please go ahead and give out your website for people where they can find out more about?
Yeah, you go to my website. That's roughtimes.com, www.roughtimes.com. And if you go to my website, I'll teach you how to rip me off. You want to know how to do that?
Sure, why not?
Sure. If you go to my website and you sign up for my newsletter for a year, you get a free copy of my book. But if you're not happy with the Rough Times after a couple of issues, you can ask for your money back, get it back, and keep the book. How's that?
Sounds good. That's the opportunity of a lifetime there, I would say.
I think it's the opportunity of a lifetime, but that's because they think everything I write is wonderful,
Mm-hmm. Well, Howard, thank you for joining us here on the Beyond 50 radio program. It's always inspiring to hear what you have to share with our listeners. It doesn't sound as conventional as everything else that we seem to be hearing out there in media today.
How you faded again.
I was saying thank you again for being on the program to be able to point people in the right direction against the conventional wisdom that we're typically hearing out there in mainstream media these days.
Well, the conventional wisdom is a way to go broke.
Mm-hmm. Absolutely.
If that's what you want, go ahead, do it.
Mm-hmm. Well, Howard, thank you for joining us here on the program today. It's been a pleasure.
You're entirely welcome.
You bet. Thank you. We also want to thank you, the listeners, for joining us out there. Be sure to visit us at our website at beyond50radio.com and sign up for our free weekly e-newsletter as well. I'm Daniel Davis. Thank you for tuning in, and remember, live your day past halfway.